Okay. Check. How about okay, I switched stuff up. Check again. Check again. Well, I'll play this song again then. Okay, give it a second. There's a little small lag. A sec. Okay, perfect. Woo! All right, cool. Hey, okay, guys, we're getting started here pretty soon. Let's do 2 minutes. 2 minutes. Okay. All right, guys, going live in 2, in 1, 60 seconds. Just want to give everyone a chance to jump on here. But I'm ready. Now I do what I want. Yeah. Ooh, okay. All right, GJ. Monster. I remember that. I actually called that trade. Boom. Awesome. Good God. 1,000 pip move. What a ridiculous move. All right. Oh, this looks interesting too. Okay, we'll hold on to that too. Let's see. And okay. Yeah, let's look at that too. All right, cool. All right, so here we got our pairs here. We know exactly what we're gonna be looking at. All right, guys. So if you're new to the channel, welcome to the channel. I know I have a lot of new people jumping on. From all over the world, just trying to learn what this Forex thing is. So I do my best to simplify it. I've actually been doing this for over 3 years now. So I am the chief analyst here at Elevated Trading Circle. So I do my best to explain in the best way I can. I've had, a lot of people tell me that I teach pretty well. And that I put it at a level where it's easily understood. So I try to continue to do that the best that I can. But again, there's a section for comments or questions somewhere on your page, on the page. So you feel free to ask questions, guys. I'll definitely get to them, and I definitely want to help you as much as possible. If you're brand new to Forex, guys, this is not really the perfect course for you or the perfect webinar for you, but I do have a great course for you on our website at elevatedtradercircle.com. And it's completely free for like a couple weeks, and you can check out as much content as you want. It's completely full access. But today we're going to be doing live analysis. So even if you're brand new, I still recommend you stick around just to watch and just to see how we actually do this. And then the discussions that we have together, like about the charts. So let's go ahead and jump into this, guys. Let's see what we're working with here. Okay. So what I'm going to do is I am going to start extremely simple. I'm going to turn this music off, and we're going to just go ahead and just do this a cappella, okay? Okay, guys, so what I really enjoy doing is I really like to start on the daily chart. Now, me and my team's personal preference on trading is week to week. So we do like to look for opportunities from week to week. There has been times where there was just no opportunity in that week and we just didn't trade. But we always look for an opportunity for that week so we can try to make some kind of improvement or profit on our portfolio. We're always trying to look for gains, right? We're always trying to look for profit, etc. So let's go ahead and jump into this, guys. We're going to be looking on the daily chart, okay? We'll be looking for opportunities for the rest of this week, but not only this week. We'll be looking for opportunities next week as well. So I'll talk to you guys about that. I'll talk to you about what is the difference between what could potentially happen this week versus what could potentially happen next week. It's all about timing. It's all about just like where the market currently is and where it may be, within the next couple days or the next couple weeks. Okay. Okay, let's see. Okay, so we'll do, because they're very similar, we'll do AUD and USD and Euro USD. Okay, guys, so let's go ahead and take a look. So for the AUD USD, it looks like we actually had to go out in the larger time frame. So right now, what's happening is we're looking at a weekly time frame. The reason why is because we actually broke structure, as you can see, for those intermediate traders that understand support and resistance. We actually broke above this previous weekly resistance, which made us really back out in the time frames to see what was really happening, and we saw that we were successfully closing above these resistance areas. So as you can see, we were looking for the next area of interest, which was going to be this red box here. And if I actually just move it, you'll see that I started that red box from the high of the wick all the way down on the body. Okay, that's considered a supply and demand zone, but it's all the same as long as you understand what it means. And to me, it's just an area of interest where reversals happen. It's all the same. It doesn't matter the term as long as you understand exactly what it is. Okay, so this was a very strong area of where reversals happen. This was the full extension of this push to the upside. And as you can see, as we ran up into that area, we actually rejected. Okay, and this is not just a random occurrence. This occurs, I would say, 90% of the time when you run into any type of support or resistance. You're gonna see some kind of rejection, right? I always recommend looking for a sharp move, like a sharp rejection or a sharp move, right? Like whether it be you're breaking through, which is like either above or below a support or a resistance, or you're looking at a very strong rejection, which we actually got in this case. Okay, so let's take a look at this. All right, so when we reached this level, we reached it twice. So we hit it one time, we had a nice little rejection, and then as you can see, we made our way down, but we started to kind of show a lot of wicks here at the bottom. Okay, and that was a very premature sign that this market wasn't strong enough to come all the way back down into this this support, and wasn't strong enough to even break below it. Okay, so when we saw that, we immediately got out of that sell. And then as you can see, the market went up one more time for one more ditch effort to break above this area. As you can see, it could not do it. We wicked out here. Okay, we had a nice little bearish candle here. And as you can see, we tried one more time with this wick here, and then it rejected. It wasn't strong enough. Okay, so that's basically all it is. It's all strength. So as you can see, yeah, this candle was at one time a strong green candle, but then as you can see, as the week ended, this candle actually ended up with a massive rejection wick or tail and a pretty solid bearish candle. Okay, so it came down and actually just created a bearish candle. As you can see this week, this market, ever since Sunday's open, it's been moving to the downside, and it's actually moved pretty nicely. So let's see what at the beginning of this week till now, it's moved to the downside about 150 pips. Okay, so if you don't know, if you're using a micro lot, that's $15. If you're using a mini lot, that's $150. If you're using a standard lot, that's $1,500 in 3 days. Okay, if you caught that trade. Okay, guys, so let's go ahead and move down to the lower time frame. So now on the weekly, now that we're able to identify the very strong areas, let's move down to the daily, which is still a very important time frame, which is actually our main time frame for long-term trading. Let's look at what our next target may be. Now we always go with structure. Okay, so if you're too beginner or you're just starting kind of your intermediate level, you may not completely understand structure like we do. But the best way to explain it is to always look left, and basically structure is either breaking a trend, right? So let's see. Let me close this crap. So either breaking a trend, right? So here's an example of breaking a trend. So we had an uptrend, right? We kind of bounced off this line here, this trend line. This is what we consider a trend line. We bounced off a few times, bam, okay, came back to it, bounced off again, bam, came down to it, bam, off again, bam, came back to it, bounced up again. And then as you can see, we created a large wick here, which is a sign of rejection. Okay, and after that, what happened? Boom, we broke right through it, right? Okay. Another form of breaking structure is breaking like a support or a resistance line. And here's an example of that. As you can see at this price here, at 0.79596, that was considered a support area. Okay. And if you don't understand how to identify support and resistance, guys, you got to go to our website at elevatedtraderscircle.com. And you can find, or I'm sorry, elevatedtraders.com, and you can find it there. But yeah, as you can see, we broke right through that. So we broke right through that, which was structure. And then we came back and retested, and that was probably another entry for us. Okay. And then as you can see, after it retested, we sold here on the retest, and it continued to the downside. Now, we're at a new trouble area. Okay. And this is another area where structure is held. So this is considered a support, right? Because this was a previous low, and this is considered support. So now that we're running into this, we may see some type of rejection. We may see some kind of stumble, right? We may see some kind of sideways movement where it just kind of consolidates sideways, which would kind of look like this. Kind of something like this, just kind of, a little bit sideways. May even kind of do like a little go up a little bit. Who knows? It's going to be some sort of consolidation or pullback, right? Who knows? So it might just move sideways and then pull back, or it might move sideways and break down. Okay, we're not sure yet. Okay, but I'm going to show you guys how to actually play this out. Let's go ahead and delete this here. So tedious. I don't know how I'm a trader. I hate tedious things, and like trading is all tedious stuff. I guess it's because I I like making money. I guess that's what it is. I don't know. That's got to be the only explanation, huh? Okay, well, y'all understand what I'm trying to say. Okay, so as you can see, very strong downtrend, nice downtrend. We've had a nice move to the downside. But like I said, we're running into this support. So what may happen next? What happens the most often when we run into a support? We get some kind of stumble, which is like a consolidation or a sideways movement, all the same. Or we get like a pullback, right, where it pulls back into previous structure, which would be around here. So we could actually see this market pull right back up into there before it continues to the downside. Okay. Or we just see this market just break straight down, right? It could just make a sharp move to the downside to the next support area, which is going to be this price here. Okay. As you can see, it's very clear, right? We have multiple different areas where this market rejected, right? So that makes it a very valid support, right, for right now. Okay. But first we have to get through this one. We have to get through the 782311, which is going to be this black line right here. Okay, so those are a few scenarios that can happen. This thing could break straight through down to the downside. This market can consolidate sideways and then break through, or it can pull all the way back into structure and continue to the downside. Now, let me tell you how I would play this out. My mentality is to save money and avoid as much loss as possible. Okay, so I'm not necessarily the most aggressive trader. But I'm not necessarily the most passive trader either. So what am I waiting for? I'm waiting for the best grade A opportunity to enter the market, because I want to one, reduce the amount of trades that I take, and two, pick the trades that would are highly probable and most likely make me profit. Okay, because the more trades that you take, the higher probability that you're actually going to lose money. Okay, statistically, just like straight up. I mean, the more trades you take, the higher risk you are. So if you take less trades, okay, there's a higher probability that you're probably picking better trades, and you're reducing the ratio of you statistically losing more trades than you win. So you want to pick and choose very carefully. So, if this market doesn't do something very close or very similar, or very specific to what is high probability or highly successful like behavior, then don't get involved. So for me, if this market, this is my mentality. If this market wants to continue down without even pulling back or doing any type of legitimate natural what's the word I'm looking for? If this market doesn't want to do any type of, how do I say this? I guess common behavior, then I don't want to get involved, right? If it wants to be weird and it just wants to continue all the way to the downside, all the way to the next support, hey, you know what? I'm cool with that. There's going to be no opportunity next week. Okay, I'm not even stressing about it. I'm not even trying to force anything. You know what? I'm just chilling. Okay, but let's say that this market does find this area to be pretty strong and it does want to reject. Let's say we get a nice flag pattern, an upside down flag pattern, some kind of consolidation pattern, a nice pullback into previous structure. Now that would be my number one choice, is the pullback in a previous structure. Okay, so that's basically what I'd be waiting for. So that would be my highest probability trade. On top of my Fibonacci retracement tool. Okay, this is just how I would do it. Okay, I know everyone's not gonna be the same, and I know not everyone's gonna understand, but that's okay, because you can get to this level, and you can do this in your sleep. I could literally do this in my sleep. The only reason why it's taking me long is because I'm explaining it. Whoops. Go back. Sorry about that. Let's go back. Okay. Is my Fibonacci still in there? Did I mess it up? Okay, it's all right. Okay, so let's throw the Fibonacci back on there. Okay, so now we have a few confirmations, right? And that's what our course teaches is knowing how to find multiple confirmations and when to capitalize on the trade. Like picking the right real estate, the right area to enter, all these good things, right? So for me, because we just broke an upwards trend, my thought is, okay, great. We've had large rejections, okay? The downtrend was really nice. We had engulfing candles, large rejections, break of trend line. That's already 3, okay? And we're reaching we've already reached our first stop. Now, what am I looking for? I'm not looking to buy this market anymore. This market has completely changed direction. I'm looking for a pullback to start a new trend. Okay, so I want to see a pullback into an area, into a high probability area, or like an area of interest or a sweet spot, whatever you want to call it. It's all the same shit. Okay, now this is going to be my personal sweet spot. Okay, this is what I feel is going to be really nice. So I think if we can wait long enough for this market to pull back into a 38.2 retracement on the Fibonacci retracement tool with our area of interest, I think that would be an excellent area to execute a sell. Okay, we're clearly already in a downtrend. That's no longer a question. Okay, structure is very clear at this area. Okay, and if we can wait, and if we can get a prime, if we can get some prime real estate within here, if we can reach this area, I'd be looking to sell that property within this area of real estate. Okay, I would love to sell right here. Okay, and I'd be looking for at least a push right back down into the support. Okay, now if we make a sharp move below, that's great. Most likely, when I do sell in this area, I'll let this market push all the way down, which would already put us about, what is that? About 85 pips in profit. And what I'll most likely do is I will manually adjust my stop loss and move it into stop profit. That way, loss is completely eliminated, absolutely, and I'm guaranteed money. I'm guaranteed profit no matter what happens. There is nothing in the market at all that can happen that would take me out of the money because I know how to manage my risk. Okay, so basically, if we can get in there and this market does decide to reject at that area, that sweet spot, awesome. Okay, we move a nice 40 pips. I put my stop loss into stop profit. Okay, we no longer are at risk for anything, and we're guaranteed something. Okay, and then we'll let this market run. Okay, and we'll see the behavior of the candlesticks in this area. Now, if we can break below with aggressiveness and sharpness below this price, I apologize. Below this price, 78231. Oh, I'm sorry, I messed up, guys. I apologize. Okay, so yeah, so like I said, so about 40 pips, right? So yeah, oh, I was right. Okay, so yeah, so it will move about 80 pips, right? That would be the first move. Okay, so about 40 pips in, I move it to stop profit. Okay, and then we would hold if the behavior at this support was acting like it wanted to continue to the downside, which would be highly likely. Okay, so we just have to wait and see. But basically, before we make any type of move, we want to see the market come right back into here. Now, let's talk about something real quick. Okay, we could counter trend trade. Okay, because this is about an 80 pip move to the upside. Okay, to be honest, that would take only about a day, maybe a day and a half to occur, which I would rather wait on. Okay, but if we get clear sign here that this market is really slowing down, or we get some kind of engulfing candle to show us that the strength is reversing temporarily, then we may scalp 20 pips or something like that. Okay, but the highest probability trade is that if we do get a nice pullback, this will be your sweet spot right in this box. So anywhere between 0.7926 and 0.79100. Okay, so it's about a 20 pip range. So anywhere in there, okay, would be sweet. Okay, and then make sure you basically are putting your stop losses above previous structure. Will probably be around up here somewhere. Okay, it would probably be a decently sized stop loss. So I would use a smaller lot. So I'd probably do I would do about a 40 pip stop loss, and I'd go for about 80 pip profit. Okay, just following our risk management rule at Elevated Trader Circle. So that would be that trade right there. Okay. So basically, guys, I almost did a full breakdown of how I'm personally analyzing this chart. That would take me about 2 or 3 minutes to do on my own. But just because I wanted to break it down for any beginners, for any intermediate traders, I wanted to break it down exactly what I'm looking at, exactly what I would do, where I would execute, and where I would take profit, and where I would put my stop loss. I want to fully execute at least one trade. And just to be honest with you guys, it only takes one pair. Okay, there's been multiple weeks, and some of my best weeks ever have been trading one single pair. So if you can catch one pair on a nice trending market, so let's say AUD USD, which is the pair we're on now, trends for the next few weeks to the downside. Okay, you follow the simple structure that I just showed you. You wait for pullbacks. You enter at the sweet spots using Fibonacci retracements and price action and structure, looking left using structure. guys, you can really, really make some dumb profit off of one pair. There's no need to look at 4, 5, 6 different pairs. Really, I think that really just messes up your game because it makes you doubt your trading. It makes you doubt other pairs. It makes you get involved in more trades than you need to get involved in. So I would personally, if you want to be the most profitable, I would try to find one prime pair and learn how to sell or buy when the price is right. Okay, so you know what? I'm just gonna go ahead and leave it at this because I think AUD USD is gonna be prime. Everything else I'm really not super interested in. AUD USD was gonna be probably one of my favorites. Let me just take a quick gaze at everything else. Okay, so we may see something here, but again, it's gonna take some patience. There's nothing that we can execute today on this one. Okay, let's see. Okay, so this may be another area of interest here. If we can reach up here, this will be a very strong resistance where you just need to wait and look for reason and confirmation to sell at this area. Besides that, I'm not really interested. You could potentially go down in the lower time frames, which I may do, and look for reason to buy the market because it's in a very strong uptrend and it looks like it could very soon be doing some kind of price action on the lower time frames. But again, you know, it just depends. And you can feel free to do that if you want. Let's see. Euro USD looks very similar to AUD USD. Let's see. So it looks like we have a very solid resistance here. So it looks like we're reaching. It looks like we're actually reaching a very strong area of interest here. So where a lot of reverses happen. So I'd probably like I said. Just like Euro or AUD USD, I'd probably wait for that pullback, and my prime real estate would be somewhere around here. And what I'll do is I'll go from the previous structure. I don't think it's done moving to the downside, to be honest. So we'll just do it like that, right? So what we'll wait for is probably a pullback into around the 61.8, where the prime real estate is. So anywhere between the 61.8 and the 50%. So, you know, if we actually did our area of interest properly, it would look something like that. Catching the wick to the body. Okay, so that's our prime real estate right there. So we have our perfect Fibonacci retracement. Okay, the 61.8 to the 0.5. Oh, I'm sorry, yeah, 0.5. Or the halfway mark. That's going to be a lot of prime real estate, especially a lot of times if you've been using Fibonacci retracement for a long time. You know that 61.8 and the 0.5 in the halfway mark, the 50.0, is like the most reached and the most used and the most popular retracement, right? So a lot of times when you're trending and you pull up this Fibonacci retracement, the market really enjoys pulling back into that 61.8 or that 50.0. Really enjoys that. So if we have structure there and we have that Fibonacci and we're in a clear downtrend, that's 3 solid, very, very solid confirmations that would be prime real estate to sell the market. Okay. So, and that might even create like a head and shoulders. So you have one shoulder here, the head here, and then another shoulder over here somewhere when it does pull back. Okay, guys, which is another confirmation of reversal. So that may be a potential for us to long-term sell the Euro USD. And if you guys don't know how to trade head and shoulders quite yet, again, you guys need to go and check us out on elevatortraders.com. I teach you all this. Okay. So, oh yeah, we have plenty potential. And as you can see, it perfectly lines up with structure. Here's structure right there. That structure. Look at that. Perfect. If you don't know why that structure, guys, again, you need a little bit of a few courses, but that's okay. We all start somewhere. But if it fits perfectly, guys, measure, move, ABCD pattern, da 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 da. All right, I can go into all that, but not today. Okay. All right. I'm done. So what I'm gonna do is I'm gonna check for any type of questions. If y'all don't have any questions, then I'm just gonna go ahead and upload this video, and hopefully it helps a lot of you. I see a lot of money being made next week. A lot of money being made next week. Potentially something at the end of this week, but I'm in no rush. Okay, I feel like we have a very long term. I would say we have a couple of months of profitability if we play our cards right. All right, so make sure to tune in with us, guys, week after week. If you want to learn more on how to do this and be very precise, I would absolutely recommend you reach out to us on our website, guys. I mean, it's free for everyone getting started, and I mean, it's just so much value. Okay, let me see. Let me just make sure we don't have any questions. Let's see. Live chat. Audio good, brother. Caleb, thank you, sir. I appreciate you, Caleb. Donzel, he really doing it 100. Donzel, what up, baby? Thank you, man. All right, fellas. Hey, I appreciate y'all always and forever, man. But yeah, next week we're gonna jump back on for the rest of the week. Happy trading. I hope you guys made profit this week. If you didn't, it's all good. Do not rush shit. There's always more opportunity. Like I said, we got bank coming to us next week and probably for the next few weeks after that. All right, I'll catch you on Sunday. Make sure to visit us. Make sure to subscribe to this channel because we're coming week after week. And I may even surprise you guys with some random videos here and there. Put in the comments what y'all want to see. I got a lot of videos I still have to make, but go ahead and I'll add them to my list of videos, and we'll go ahead and get this rolling, man. All right, talk to y'all next time. Peace out.